Ladies and gentlemen, good day and welcome to the Q3 FY'24 conference call of Garware High-Tech Films Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Verma from EY. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the Quarter 3 and 9-month FY'24 earnings call for Garware High-Tech Films Limited. On behalf of the company, I would like to express our gratitude to each of you joining the call today. To discuss the performance of the company and to answer the questions, we have with us from the company Mr. M.S. Atsul, Director Technical, Mr. Deepak Joshi, Director of Sales and Marketing, Mr. Pradeep Mehta, the Chief Financial Officer, Mr. Sunil Wadikar, President Corporate Affairs and Finance. Before we begin, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management control. We kindly request that you bear in mind there may be uncertainties when interpreting such statements. Please note that this conference is being recorded. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for an interactive Q&A session. I would now like to invite Mr. Deepak Joshi to make his opening remarks. Over to you, Deepak.
Thank you, Mr. Verma. Ladies and gentlemen, good afternoon and thank you for joining us to discuss Garware High-Tech Films Limited financial performance for the quarter and 9-month ended on December 31, 2023. Let me start by providing a brief overview of our financial standing. We are excited to share GHFL's exceptional Q3 FY'24 results, showcasing our commitment to growth and profitability. We have reported the highest ever revenue of rupees 454 crores and highest ever PAT of rupees 56 crore for the quarter. The key driver of this success was our PPF and SCF businesses, which witnessed a stunning growth of 80% YOY, which was partially offset by IPD segment, resulted in slight decline by 9%, which is due to excessive capacity in the industry. Let me briefly explain our main product lines. First of all, I would like to talk about paint protection films. Our PPF business experienced a remarkable 35% sequential quarterly growth in revenues versus Q2 FY'24. We experienced a strong demand from key customers in various geographies like USA, Middle East, and India. Our recent launch of ceramic coating over our PPF complements our PPF product line, and we expect further growth potential on that. We have now complete package of matte PPF, black PPF, and white PPF, which is on top of the range from our transparent PPF. Our PPF business now contributes more than 1/3 of the total revenues. Our lines are currently operating at an optimal capacity with intermediary process supported on other lines. We are quite confident of continuous growth and making provisions accordingly by certain debottlenecking and considering further growth plans. Now I would like to talk about solar control films. On the SCF business front, we experienced 10% sequential quarterly growth in revenues. This is attributed to growing automobile sales worldwide. We expect the positive trend to continue, further supported by introduction of rooftop series for auto sector and new grades into architectural and decorative film segments. We received significant interest at the recent ACE-Tech Expo in Hyderabad, indicating strong potential in this new market. SCF constitutes around 35% of our total quarterly revenue. The recent launch of our rooftop series at Automechanica Expo demonstrates our commitment to catering to India's market-specific needs. Now, lastly, I would like to talk about industrial products business. The IPD segment faced headwinds during the quarter. We remain committed to its future in the value-added segment. We are focusing on expanding our specialty segment and improving capacity utilization, and we believe these strategic initiatives will strengthen our market presence and drive future profitability for the IPD business. Lastly, we have aggressively worked on resource addition from across the world, participation on most of the relevant shows, and worked on digital media presence increase worldwide. I am happy to announce that our digital media footprint has touched a number of 120 million in total. With this, I'll now request Mr. Pradeep Mehta, our CFO, to take us through the highlights of financial performance. Over to you, Mr. Mehta.
Thank you, Deepak. And a warm welcome to everyone joining us today. I am delighted to report this quarter with the highest ever revenue and robust operational performance. Our company reported record consolidated revenue from operation of rupees 454 crore with 40% year-on-year growth and highest ever PAT of rupees 56 crore in a quarter. It's an impressive 84% increase when compared to the corresponding quarter last year. Around 83% of our revenue has come from export in quarter 3 FY'24. Also, around 91% of our revenue has come from the value-added film in this quarter 3 FY'24. This is positioning us for superior growth within the industry. And despite industry headwinds like Red Sea crisis, supply chain disruption, and this excess supply delivered a stellar EBITDA performance in quarter 3 FY'24. Our EBITDA jumped 61.2% year-on-year to rupees 85 crore, with margin expanding to 18.7% compared to 16.2% in the corresponding quarter last year. This impressive growth was driven by surging demand of PPF in both domestic and international market, and solid rebound in our SCF business, and effective shipping and logistic management by the company. Other than the strong growth reported for the quarter, our balance sheet remained exceptionally robust with zero debt and a cash surplus. And this healthy financial standing allows us to invest in future growth opportunity and with confidence. We have also seen a significant improvement in key financial ratio. In the first 9 months of FY'24, we achieved an impressive ROC of 21.12% and an ROE of 15.86%, excluding the effect of revaluation reserve. This figure demonstrates our efficient utilization of funds generated from the business. Furthermore, our inventory turnover rate also decreased to 6.5, while our effective working capital management practice have maintained our working capital cycle delay days to just 7 days in 9 months FY'24. This improvement reflects our commitment to operational excellence and efficient cash flow management. In conclusion, we at Garware High-Tech Films remain dedicated to manufacture and deliver superior quality products and meet market demands worldwide and solidify our position in the value-added film industry globally. We are confident to continue the growth momentum and remain committed to deliver value to our shareholders. Thank you for your continued support. Let us now proceed to Q&A session. I hope you have our earning numbers as well as the investor presentation. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use your handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ankit Gupta from Bamboo Capital.
Yeah, thanks for the opportunity and congratulations for a great set of numbers. So my first question was on the PPF. We have seen stupendous growth in the segment not just YOY, but QOQ also, this has reached almost 163 crore of revenue in quarter three. And do you think this is this run rate of around 160 crore is sustainable, or this was just a one-off quarter?
Yeah, thank you very much. And yes, actually, the business on PPF is really, we have been able to do good. And with many contracts and the sales growing all around, like I said, in USA, Middle East, India, and in fact from other markets also. So we are quite confident that this momentum will continue like what it is. It may grow even further from here.
Sure, sir. That's good to hear. Sir, this, since more than 90% of our PPF sales is exports, how much of that will be for, white labeling, and how much will be sold through our own brands like Global?
Strategically, we keep it both 50-50 for our brands, which include Garware Global and White Label. But sometimes because of market demand, this is slightly 55 to 60% on 55 to 60% on White Labels and balance on our brand.
Sure, sir. And sir, on PPF, since our PPF plant is fully occupied and we are using the Sun Control Films line for intermediate process, any plans of, we were thinking about further putting another line for PPF, so anything which has been decided by the management and the board?
Yeah, we are cognizant of the fact that the PPF is continuously growing business for us, and we are putting a lot of efforts, which is participating in more shows and digital campaigns, and finally reaching out to many OEs directly. So with this, we expect the momentum to continue, and management is fully aware of the fact of the capacity which is being utilized right now from Sun Control Films. So we have enough capacity available in Sun Control Films as of now, and as a strategic support to PPF, we have debottlenecked one of the line to make one of the component of PPF, so that the capacity constraint won't be there in next 1 year. In the meantime, we are in the advanced stage of finalization of some of the advanced kind of machinery for us, which will be highly automated lines. So that if that proposal comes out well, and if board approves that thing, we will come out announcement of such lines soon.
Sure, sir. But on Sun Control Films also, we have seen some improvement in the quarter, in this quarter on a QOQ basis. So do you think this growth is sustainable? And we have also we are also putting trust on architecture Sun Control Films. So yeah, how do you see the outlook for Sun Control Films going ahead?
Yeah. See, Sun Control Film has been a very strategic and very niche business, and Garware has been present on the top of the table or top of the pyramid if we see the usage and the pricing. So with that, and that is a very important business for us. And last year, as I explained in my previous investor calls, there were a lot of inventory issues in key markets like USA and Europe, which has gone down. We discussed that during the last investor call. So that pressure was gone. So now we expect the growth to continue in the coming quarters as well. And second thing is, with the season where summers, we are moving towards summers, and in preparation of that, we expect this growth to continue. And lastly, about architectural, so we have put a lot of efforts. We have hired resources into that, and we have participated into, like recently, ASTEC kind of exhibitions, and we are doing that kind of campaigns in the increased energy into that segment. So that will also lead to a further growth of Sun Control business for the company.
Okay. Well, on the overall profitability, if we look at, we have seen a significant uptick in our revenues. But despite that, there wasn't any advantage of operating leverage coming into our gross margins and our EBITDA margins especially. And in fact, our gross margins have declined sequentially. So, let's say, how do you see the operating margins going ahead, and what has been the reason for, lower or maintaining the similar EBITDA margin despite significant increase in scale of operations?
Yeah, the margins actually are product of product mixes. So we have wide range of product mixes in IPD, and then on Sun Control also there are wide ranges, and then in PPF. So if you put together, that range is always 1 to 1.5% of EBITDA percentages. But this IPD business, which has gone to some rough patches in last 2-3 quarters, we are seeing that is kind of bottomed out. So any margin improvement there would definitely lead to this EBITDA margin improvement. That's number one. And second thing, as we are focusing more of the specialty segments, including architecture, where IR films would be a key for our growth drivers. So we expect this to go higher. And lastly, we have penetrated the market with quite aggressively into the market. So as the guideline given by the management in the last quarterly calls, that in 1.5 years time, on a little medium to long term kind of horizon, we expect these to increase. I hope I answered your questions. Yeah.
Thank you. Ladies and gentlemen, I request you to limit your questions to 2 per participant. The next question is from the line of Dhavnil Desai from Turtle Capital.
Hi, good afternoon, everyone, and congratulations for a very good set of numbers. So all the hard work that we have done is paying off. So my question, Deepak, is I think in the presentation there are 2 or 3 new products that we are talking about. One is the roof, sun control film, and the second is the ceramic part. So ceramic coating, if you can talk a bit about, are we only launching this product in India or this for international markets also? And if so, are we competing with the same players? What is the market size? Is the idea more to target the mass market? If you can walk us through that.
Yeah. So you raised 2 points. One is the rooftop series. So rooftop series has been launched just to interest of the audience. That so rooftop series includes all kind of roofs, whether it is sunroof, moonroof, or the roof, painted roof without any kind of sunroof or moonroof. So these 3 different categories of films have been launched to reduce the solar heat which attacks the car from the top, from the rooftop. So the special point here is without glass also, like on the painted surface also, we have developed this film which will help the lower end cars to efficiently save their energy cost by reflecting the heat from there. So that product, we got a very good response from our latest. We launched it in Automechanica, New Delhi. It was widely covered by media, and we got very robust response from social media on that. So we are really happy to share all what happened there. And after that, the next point you talked about ceramic coatings. So the current ceramic coating which we are talking, we are doing that only because we want to penetrate our product much deeper into the channels, and we have an existing channel of our dealers, distributors, dealers, Garware application studios, and retail houses. Detailing centers. So people who are using our PPF, we are giving this as a starting to start with. We have kept it as a kind of introductory prices, and we are receiving good response on that. So that helps to keep the car shining till the warranty period of 10 years. So the major item of this major advantage of this ceramic coating is to keep your car new and shiny for over 10 years period time. So, and we are using our existing network of Garware application studios and detailing centers. Now, we are also planning to give this product to our export market also, where they are exclusively using Garware products. And with this, we will be doing more of the products to make our chain robust and sustainable. Maybe some more products, toolkits and other things will soon be coming into the list. So we have aggressive plans to use the existing channel to penetrate more into the detailing market with this.
Yeah, just one thing to
Mr. Artul is also commenting on that.
See, this is not a regular ceramic product, which is different. So this is on the top of a PPF. This is a complementary product for the PPF.
Okay. So it is not the same product as where you buy a new car, you go, if you want to go on the lower price point, you apply ceramic coatings. Aren't we talking about the same product?
No, this is this PPF we have mentioned. It is for the PPF surface, which is being used by many big companies in USA also. We don't apply that to on direct painted surface, because that is that does not last more. I mean, the life of that product remains 3 to 6 months. So that's why we recommend that to use on top of PPF, and which are giving very good results. And this has been successfully being used by some of top USA brands as well.
Okay. My second question is, so from whatever commentary that you have given, Deepak, till now, apparently everything seems to be good, and the growth is intact, and solar growth also is likely to come back. PPF also is looking good. So the only question now is that we are exiting this quarter with 450 crore revenue. So we are looking at 1,800-1,900 crore kind of a run rate, plus next year we'll grow at 15-20%, whatever. So we are surely constrained for capacity, because in our earlier calls you have said that we can go up to 2,300-2,400 crore top line. So what is the reason why we are taking our own time in terms of new capex decision? Are we not sure about the market side of it, or is it that we are taking more time in terms of finalizing the contours? If you can give some more idea about that.
See, we are, if you really see the growth targets, what we have been trying to achieve, we have achieved that. In fact, we will continuously achieve the growth. Like you also mentioned, we have declared in our, given the guidelines in previous investor calls as well. So whenever traditionally we have been very firm on our investments in terms of the quality of the investment, and in terms of something which is unique and should not be, just repeat or copy, can be copied by the market participants, right? Our competitors or anybody who wants to indulge into that. So that idea of putting another line will fall. We are trying to make investment which will be, very unique in its manufacturing process, and plus it will add a lot of value over what we are currently producing. So in this line, we are working, and soon we will, once this is finalized, we will come up. We will not hold any capacity or any order back because of that. That we assure you. That assurance has been given in the past also. At the same time, as you must be aware that we have enough capacity on sun control side. We have 5 lamination lines, which are, one of them is the highest one, which we 1 year back we have commissioned that. So with that we will be able to use that for PPF going forward for 12 to 15 months. By that time, if everything goes well, we will have a new line in place.
Okay, got it. I have more questions. I'll come back in the queue.
Yes, thank you.
Thank you. The next question is from Akshay Shah, Chris PMS. Please go ahead.
Hello, am I audible?
Yes.
Yes.
Yes. Congratulations on great set of numbers. Wanted to just understand a couple of things. One is when what is exactly leading to the growth which we are seeing right now? I think one of the pointers which you mentioned was you have some contracts in hand, so that is giving you confidence that this growth would continue. Any other factors which you are seeing that we see this growth would continue going forward?
Sir, the most important thing is the study of the market, the quality of the product, and like when we compare Indian market as compared to US market and China market, if you really see, all of them have grown very well in PPF, right? Like you would have heard about Tesla trying to do so many PPF on the assembly lines and all. So we are actually, we are aware of this fact that PPF is a product which really adds value to the car, especially to the high-end cars. So with this confidence, we started 2 years back into the Indian market, and we are now couple of, I can say multi-folds, close to 10 times from where we started. So this kind of awareness of the market and confidence in our quality, we are sure that the growth, this growth will continue. So that is where the growth actually coming from. And second thing is, last year was a year when there was a lot of inventory piled up into window film segment, in the water also, when the transit time went very high, and at the same time after COVID there was a sudden drop in demand, and a lot of material was, because we supply all over the world, so what happens is a lot of inventory remained unsold that time. We sold, but it was remained into the channel. So all that is over, which we discussed in the last quarter, and the things it has cleared whatever obstacles were there. So we are growing into that, and as we see, we are quite confident growth on sun control market also. So the growth is coming from PPF with our confidence, quality, and the market penetration which we believe we can do, and from the sun control business and architectural segment as well. So there, the growth is coming from these areas.
Got it. Perfect. And one more question I have is around what would be the proposed amount for these new equipments which are under pipeline, and even after that, I believe, if you over next 1 year we would still have some surplus funds even after the capex, right?
Yeah. See, I would like to comment on that once we announce all those things, once board approves that, because these information, nowadays we are seeing a lot of downturn in the industry, similar, and we are the ones who are actually on the steady growth path. So we don't want to share the information which are very sensitive in nature, right? So that's why I would request, I would excuse myself on divulging this. But once again, the commitment of the management is we are working in the right direction, and the growth path would continue. Like somebody asked me, are we not confident of the fact that we would continue to do good? So I once again would like to reiterate that we are quite confident of the performance, and we will do whatever is needed to keep this growth momentum alive.
Okay, perfect. Thank you so much.
Thank you.
Thank you. The next question is from Chirag Filoke, Ratna Rai Capital. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. I have two quick questions and another question, three in total. Just the first question, cash.
Can you? We are not able to hear you. Can you say it louder and clearer, please?
Hi, is this better?
Yeah, it's better.
Okay. So, a quick question on the cash. Last quarter, if I'm not wrong, our cash position was around 350 crores, 354 precisely. And this quarter, we've ended at 311, despite a very strong result. I just was wondering whether my numbers are wrong or if there's something that I've not understood.
We have made the loan prepayments. So right now, company is completely debt-free. Mr. Mehta, would you like to add?
Yeah, that's perfectly right, Deepak. We have repaid all the entire loan, term loan, and whatever is due. So now it's a debt-free company. So that's why the numbers are, whatever you are saying is correct.
No, sorry, sir, but last quarter itself, our long-term debt was already zero, right?
No, some of the payments were pending, so we paid in this October month.
Okay, understood. Understood. So that has been done this time. Okay. The second question, sir, I actually have on gross margins. I think there was a participant who alluded to the same thing. Our proportion of PPF has gone up, and I'm comparing only between September and December, just the last quarter and this quarter. And the IPD proportion has gone down. Despite that, sequentially, the gross margin seems to have gone down a little bit. And there's a significant improvement in the mix even in these 2 quarters. I was wondering if there's any light that you can throw on that.
Yeah, like I explained, it is not direct proportion, like IPD proportion has gone down, but whatever product are there, their margins are almost at a very, very low level. So that is one of the reason, but we saw that, kind of coming back. But at the same time, when there is a high proportion of sun control goes into the product mix with IR products and all, this margins tend to generally increase. And second thing is, we have done a lot of introductory offers to increase the penetration of the PPF for obvious reasons, because we are only 4-year-old in PPF market against our world competitors who are there for last 20 years. So to do that, we started some initiatives on that, which will go away in next 1 year or 1.5 years. So we expect the margins to improve on that behalf.
Understood. And for this quarter also, we would have spent around the same amount as last quarter, the 7.8 crores on our consulting and the partners that we work with for the marketing side. Is that right?
No, it was not that much. Actually, it is less than 6 CR. So that will continue because they have been giving us good light on the market scenario and helping us to grow digital footprints and marketing efforts and new geography penetration and all those things. And mainly also working on OE developments.
Understood. Fair enough. So last question on the sun control side, what proportion of the sun control revenues today are from architecture films, or is there almost nothing from architecture films right now in this quarter?
No. If we see total around 35%, numbers are there in the presentation, but I think 35% comes from sun control division, window film division. Out of that 35%, around 20% of that 35% comes from architectural segment.
Understood. Sorry, sir, I missed that. Thank you so much.
Thank you very much.
Thank you. The next question is from the line of Aditya Rathi from Equitas Investments. Please go ahead.
Yeah, thank you for the opportunity. And first of all, congratulate the entire team for a great set of numbers. So my question was related to the IUPD division. We wanted your guidance in terms of how the outlook of this division is looking currently, and when can we expect some kind of turnaround?
See, industrial product division is currently facing a lot of headwinds, and all of us are cognizant of the fact that all the peers in the industry who are mainly focused on commodity and packaging business segment, so they all of them, including us in that particular small segment, are struggling. That is happening primarily because of overcapacity. And secondly, I think a lot of world over geopolitical tensions also created a lot of barriers in terms of trade, and this basically leading to a very low margin scenario currently. And this has been ongoing for last 15 months, if I am very particular, if I may say. On that, so that scenario we expect to continue maybe another 6 months to a year. But what we have done, like 15 months back, since today we have changed a lot of product lines where we continued to make margins on that, and rest, wherever we were not feeling confident of the current market scenario, these products we have dropped. So we will maintain the current flow for next 6 months to a year. That is unfortunate, but this will continue like that. But then we expect some of the market participants may not like to continue, because some of them are fully dependent of these kind of business lines only. So, and Garware is a company which has got experience in these kind of products for over 40 years. So those specialty products are still doing same, but their total portion of the business in IPD around 50%. So 50% of the products where the experience, quality, everything matter, we are still doing good. Rest of the 50% where there is a lot of competition, we are not doing that good. Nobody is doing good on that. And we expect this scenario to continue for 6 months to a year time. But our overall performance, if you see, will be like similar lines, because we will be more focusing on to consumer product divisions.
Got it. So what would be our capacity utilization currently at IPD?
71. We have given that to the presentation. 71%.
Okay. And lastly, I wanted to ask a question related to the PPF division. So earlier you mentioned that given the capacity constraint, we will do some kind of debottlenecking, and we'll also utilize.
We have done that.
Capacity. Yeah. So this will basically not lead to any capacity constraint for the next 1 year, right?
Yes.
So I wanted to understand what is the total amount that in terms of revenue that we can extract out of such initiatives going forward.
So I think if we use all the debottleneck capacity with the current one, so it can go as high as 600 crore per annum kind of numbers from PPF.
600. So if we look at this quarter, it is close to 130, 140 crores. So we are almost at that level. Is it fair to assume that?
We still have a headroom of around 20% to go. And plus, as I said, we have done some debottlenecking, but we have total 5 lines where we can use all those things. So we can do further such initiatives for a year. We have made internal plans, like for next 1 year, 12 to 15 months plan is already there, where looking into 15-20% growth from the current level also would be catered.
Got it. Fair enough. Sir, I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC MF. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, business-wise, we are doing really well in terms of growth and margins and even cash flows, balance sheet, everything is fine. Only thing is that our return on equity is in a single digit, probably near to 10%. It's simply because it's a total capital employed in the business. Around 70% that is from the net block. So I'm just trying to understand, out of the net block, how much is actually we are using for the business purpose, which is actually contributing to the top line and bottom line of the company, and how much maybe spare land or spare gross block, which is not adding any to the numbers as such.
I'll answer this. Basically, we possess 4 significant land parcels acquired some around 40-45 years back, and these were revalued by 765 crore few years back. 2 of the land parcels are at Aurangabad, Walunj and Chikhalthana, and one is at Nasik and one is at Mumbai. With regards to Nasik, we are evaluating potential buyer to sell this plant. And for Mumbai property, we have no such plans to sell this Mumbai property. We have made a Garware application studio where we do installation of PPF and everything. And this development of this property is restricted due to airport authority. There are some restrictions of height. Because of that, we cannot develop, and it is not viable. So if we compare only because of the 765 crore revaluation, our asset turnover and other ratios are getting impacted. This land is bought 45 years back.
No, but if we remove that part of the total net block, then how much net block would that actually contribute in the sales?
That way only Nasik plant is not in use, but the value will be around 85 crore.
Yeah.
85
See,
crore.
if you really see the land parcels where we have Chikalthana in Aurangabad where the plants are running, right, and Waluj where we are continuously growing, which is the biggest land parcel, right. So there that total is around 135 acres. There it is, many plants are running there, and we are continuously on the growth path, and we expect to put more lines there in Waluj. So Aurangabad, it is more or less utilized. Now the only area which remains where we can do some kind of development is either Mumbai, where we are looking for right time where the investment makes more sense, attractive. When there is airport funnel zone or some kind of restriction, they may change the regulation. Based on that, that can be an attractive proposal. So that property we may only think of the development, not for the sale purpose. So the last one remaining is Nasik, where we have got offers to sell that property, but still we are negotiations going. We are, the results are not at the desired level. Means we wanted the amount which is not has yet been achieved. So we are continuously working on that.
Sure, sir. And sir, any plans of merging Garware Industries Private Limited in near future?
Yeah, Sunil, can you explain on that?
No, actually, we currently don't foresee any plan. Basically, the deep dyeing and thermostatic intermediate process for sun control film is done by Garware Industries, which is one of our related party. Now, 2 decades ago, Garware Industries had set up a manufacturing facility just to support Garware High-Tech film. The technological process is patented one and is closely guarded to protect our product recipe and restrict competition. The facility, Garware Industries have updated time to time basis our Garware High-Tech's demand. And these transactions, what we reported are currently at very competitive rate and are at arm's length. At the same time, it is cost beneficial to Garware High-Tech films. And as such, we currently don't have any plan to merge this entity with the listed entity.
Yeah.
Sure, sir. Thank you so much, sir.
Thank you. Thank you very much.
Thank you. The next question is from the line of Parv Jain from Nishay Investment Advisory. Please go ahead.
Hello, sir. Congratulations on good set of numbers. So my first question would be on your IPD division. So if you see shrink films business, it has been, marginally, it has been remained constant, and our market share has also remained constant over the quarters. Can you give a broad outlook on how that side of business is, and how is it growing, or what is the outlook ahead for that business?
On shrink films, we are continuously growing despite a lot of challenges into the market because the season last year was not that great in India. But the growth has growth has been there, and our key markets in which is USA, there the growth we are still witnessing good growth there. So overall, the business is doing good. But shrink is only we produce in one dedicated line, and on another line it's like campaign runs. So both these lines are running full.
Okay, sir. Sir, approximately what is the capacity for shrink films that we have, and what is the utilization for that part?
See, we have, as I said, 2 kind of capacities. One is a dedicated line, which is roughly around 5,000 tons year. So that is fully utilized. That is 100% utilized. And another facility there we can make around 3,000 to 4,000 tons, which is a fungible capacity, and that we are utilizing around 70 to 80%. That is not a dedicated line, because that line we use for our other products, which are kind of a backward integrated products for our CPT division.
Okay, sir. Sir, this IPD division, the unutilized capacity, so what are our plans to maybe bring that capacity to optimum utilization levels? And do we plan to improve the share of shrink films, or how do we see that IPD division performing better?
See, on the shrink film division, definitely we are working hard to increase the share of shrink films. But the dedicated line is fully running on that, and the other line also, because there are so many products are manufactured on the other line, which are some of them are key components for CPD division. But there are other products other than shrink also where we are working, and we are doing good business in the recent times. Last 2-3 months we have started good volumes of a particular product. So we will continue to work on such products which are away from general commodity segment. So that's how we plan to increase our capacity utilization. At the same time, this business is, if we have seen historically, there is always a cyclic trend in that. So currently it is going through a cyclic low. If you really see 1.5 year back, this segment has made a lot of money for all of the participants. So right now it is going through a cyclic low where a lot of capacities are there. But as I'm happy to announce that the OEs and all those things, whatever the expansion were like pre-planned for last 1 year or so, we are hearing that they all are going away. They have put off the plans they have ceased to order new lines. And whatever there were some participants who are not going ahead with their planned expansions. So in that way, it looks that there will be a time in a year or so when the growth is already there. So that will keep matching with the production. So that kind of equilibrium will arrive into that segment.
Okay, sir. Sir, second question would be on the ceramic kit line, ceramic kit product line that we have recently introduced. So what are our plans in this segment? Are we also planning to introduce a standalone ceramic kit product which will be applicable on the direct metallic body? And second, what will be the capacity that we'll be using for this? Is it being manufactured internally? Are we rebranding some product? How does this new product line work? Can you throw some more light on that?
See, on that we have plans, but again, because of this is highly competitive in nature, so we are working on that, and not only that particular product, ceramic coating, we are also working on other products where we can empower our proven channel sales of PPF. So there we will be utilizing new products to make them sustainable business lines for our channel partners. So in that direction we are working, and we will announce all those things at the right time, because as of now it will be it is like, I would say, for competition's sake, we are avoiding any comments as of now.
Okay, sir. Sir, a broad estimate of the market size that addition to the, I think we are not using our manufacturing capacities for this ceramics, so this is going to be an add-on to our existing revenue potential that we can do. So
I'm sorry, but I'm saying there are some things which which makes us this is very confidential information, so I wouldn't be able to answer this right now.
Okay, sir. Sir, congrats on the good set of numbers. Thank you.
Thank you very much. Thank you.
Thank you. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
So congratulations on a very good set of numbers, especially under the leadership of Mr. Deepak Joshi. It's been executed very nicely. And sir, just wanted to know, sir, should we, our company, I feel, is very much undervalued, and so our higher management should make an effort to participate in the various investor conference and meet the foreign institutions and others, because it's a unique sort of a business. And if you can highlight the differentiators and the USP for the benefit of everyone who's joined in the call, where do we score? So don't you think that the price earning at least can increase if you can increase our
I think line is not that clear. If you can say little slowly, we can understand, because
is it better now, sir? Yeah.
It is better. Yes, please.
Yeah. So what I was trying to say is that we feel that the visibility of our company is still very low, and if we can meet the different analysts and participate in the various investor conference, meet the various foreign institution and the mutual funds to increase the visibility of our company, then it will be very beneficial, because the second thing is, if you want to highlight the differentiator in the USPs of our company vis-a-vis competition worldwide in India, and also the opportunity size for different products, architecture film, solar film, PPT, the expected growth rates, sir.
Yeah, there are two aspects. One, we are really, working on all aspects, like, the products, like we are participating. So, in terms of marketing and branding of the product, we are working on all fronts, right? We are participating in shows, digital media, and on the resources world over. We are working on that, and we are getting very good results. Like I said, even the digital footprints have crossed 120 million, right? Now, on the second part, we have our partners Ernst & Young, who are doing all those activities. Maybe we'll take, good note of this, and we'll see. Anybody has to say anything on that, right? So, sir, anything else you would like to know on that?
Yeah, just wanted to know about the opportunity size of our architectural films, solar films, PPT, and the expected growth rate in these segments, sir.
Yeah, see, on PPF, we have given the entire the product range we had. We were in transparent, then we launched matte, black, and white PPF, which are actually, the lines are running beyond capacity on that. Sun control film is continuously increasing. And when you talk of architectural film, we have growth quite, like I said, around 20% revenue has started coming from architectural segment. And we expect that to grow, we expect that entire around growth of 20 to 25% on window film segment, and same around 25-30% growth on architectural segment as well.
And any competition scenario for these films, sir? What is the competition intensity like, both in India and abroad?
There are around more than 50 companies who make window films world around, right? If you really see, there are a lot of competition, if you really see. But the real point here is, sir, the quality of the product, right? So our products are deep dyed products, which are manufactured only two places in the world, mainly. That is a big qualitative advantage which we are having on sun control films. And another aspect are kind of IR rejection Garware films gives. That's a very unique and of high quality. So these two are like a significant points where we are very different from our competitors. So the quality is one of the key factors where we say competition hardly affects us, because we have been here for last 40 years and continuously growing. So any competition, if they are coming from the glue dyed or chip dyed and all those kind of things, they are coated products. They do not stand in front of the quality of Garware.
What was the second point you mentioned? What was the deep dive? The second point I could not hear, sir.
The kind of IR rejection, heat rejection on the Garware films.
Okay. The UV protection you mean to say, yeah.
Yeah, there is a nano dispersion facility with nano technology, which is very unique product line by Garware.
Very nice, sir. Keep up the good work, sir. Thank you very much, sir.
Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Preet Nagarset from Wealth Finvisor. Please go ahead.
Yeah, thank you. Thank you for that. Sir, I wanted some clarity on the kind of turnovers that we can expect for the forthcoming year. The reason I'm saying that is, in some earlier calls, we were going with a 300 crore annual run rate for PPF, which I think now, because of debottlenecking and utilizing other capacity, it could become 600 or more. So could you give some light on, if you were to combine PPF, Sun Control, Films, and your IPT division, cumulatively, what kind of run rate do you see for FY'25, maybe for FY'26?
Sir, in our guidelines, we have said FY'26 will complete 2,500 crore. We will maintain that.
So you look to be on track for that. But given the current upsurge in demand and the sustainability that you see, do you see, and maybe the new lines you'll put up, do you see a chance of surpassing that, or?
We may see further growth, but let's keep that guideline of 2,500 crore. We will definitely try to surpass that, because these things keep coming with our efforts and everything. We may achieve higher than that, but as a guideline, I would request to keep from all management sides 2,500 crore for FY'26.
Wonderful. That's all I had. Thank you so much for that.
Thank you very much. Thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. My first question is on the PPF division. So, two parts to that. First is, you had talked in earlier calls about we are as of now importing most of the raw materials, and because we haven't achieved the scale and maybe there's some things we are working on. So when do you expect the indigenization of the raw materials like we have for SCF? Similar thing for PPF, if you can talk about that part first.
Yeah, actually, in our last calls, we said that because of fast penetration and everything, we did all those things. But most of the items we are ready, and we are using in some of the material already using. But that will go slowly and slowly. Maybe in another 6 months to a year timeline, everything will go as other than one major component, rest all will go as a captive consumption.
And this will lead to the margin increasing, or this will only happen once that major component also is indigenized?
Yeah, there will be a margin improvement. That's what I said when we talked about EBITDA increase. So this all, there are a couple of points. So this will also be definitely in a margin increase. This will definitely increase the margins as well. Yeah.
Sure. On the domestic business side, both on PPF and SCF, given a lot of the new products which we are launching, including roof fan control and all those things, plus in PPF we are seeing the mid-range cars also now slowly getting right from the start getting this PPF in. So how big do you think this domestic PPF plus SCF business can be for us in the next 2-3 years? Do you think it will be now much bigger than we were earlier anticipating?
See, these things, everything was planned. We discuss only at the right time, because there are, like Mr. Adsud is here, he is working maybe 10 different products as of now. But we, to avoid, the secrecy out, we announce when everything is done, and finally we are launched to the market, right? So we are working on many such products, and we have been working even when we were doing the past conference calls. So we were having idea like what we are going to do. So with all those things, we are already prepared for future. Whatever is coming into the future. So as I said, as a guideline, we'll definitely try to do better than what we have already said. But the growth, whatever is coming from these products only. Like IPT is more or less stagnant, though worst is over, but still at a lower level. From there, these products which fall under sun control films for automotive, architectural, and PPF, and these new PPF variants which are matte, black, and white, they will definitely add value to that. And all the new products take some time, sir. It takes 2 to 3 years. Like if you remember 4 years back when we started PPF, first 2 years we hardly saw any revenues. So these all is the market creation, lot of initiatives are required in terms of marketing, digital media campaigns, and lot of dealer distributor penetration. So all those things takes time, but definitely all these are seeds for the future growth of the company.
Sorry, just again some numbers. Today, what is the domestic business size, and in the next 2 to 3 years, where do you see domestic PPF plus sun control films going to?
That we have actually a target to do double. If the numbers are, Mr. Mehta, can you just tell the numbers, because I don't have in front of me.
But I think if I'm correct, Mr. Aman is asking the projections for next 2 to 3 years in terms of PPF and window film in the domestic market. The projection he is looking for. Am I correct, Mr. Aman?
Yeah, and even what is its current business? In FY'24, we'll end at what, 100, 150 crore? What is the number? Base, what is the base?
We have given 100 crore guideline on that.
Sorry, 100 crore in 2-3 years or 100 crore as of today?
No, we said in 1 year's time frame, because we said that 6 months back. So in another 1 year's time now, from now, by end of FY'25, it will be more than 100 crore business.
Sir, you're including both PPF and sun control films and all the variants combined?
Give me a second. Just give me a second.
Oh, I was asking overall domestic business.
Overall domestic business, overall domestic business would be roughly around 200 crore in 2 years timeline, for both window film and PPF from the current level. So it will be like almost double what we are doing currently.
Sure, so that helps. Final question is on the architectural films. We are currently doing around 100-120 crore of yearly run rate. And given this opportunity is much bigger than PPF, SCF, is there a potential of tying up with someone in, say, white labeling or something of that sort, so that this business, so like PPF, has now become like a 500-600 crore business yearly basis? So is there a potential to do something similar in architectural films so that...
See, sir, your voice has gone too low.
Yeah, so let me repeat my question. Yeah. So I was saying, like in PPF, we have been able to scale to 500-600 crore number on an annual basis with the help of tires, white label. Is it possible to do something similar for architectural things where we can tie up or do white labeling so that this also scales faster? So organically, yes, you can grow 15, 20, 25%, but to make it 300, 500 crore business versus say 100 crore.
No, understood. So we have already done that. We have done with a big partner in Europe doing these kind of activities, and similarly we are finding some similar partner in USA. So that is already on our list. So we have done one big partnership in that, and another one we are doing with a big distributor who is like supplying direct to many buildings and all those things, that network in USA. That is already under discussion, so hopefully that will also be closed in 1 month's time or so. So we are doing that white labeling and doing inorganic growth in architectural segment.
And do you see this segment in next 3 to 5 years becoming, say, like 300 to 500 crore business, or do you think the growth will be more like...
So we can't hear you. See, the voice has gone low, but I understood the question. So definitely what we are thinking in that particular segment with the new line in place, the idea of that business to grow quite fast. But that's a very sub-segment of sun control business, and we are targeting, as I said earlier, around 30% annual growth. That is what we are targeting on that business. So that will be like similar lines, what you are saying, 300 crore, 400 crore kind of numbers. Because there are many products which are similar in both automotive and this, so that's why the bifurcation becomes a very thin line. But if you talk of the growth of that particular product, will be in the range of 30-35%, and at the same time, it is in line with the company's growth targets.
Sure, sir. Thank you. That helps.
Thank you.
Thank you. The next question is from the line of Priyank Agarwal from Equirus Wealth Private Limited. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yeah. First of all, congratulations for the good set of numbers, sir. So my question is with regards to if you see the segment-wise, like SCF and shrink, both the products are flat YOY, but if you see the special IPD, that is 12% up. So can you throw some light on special IPD? What is the plan? How do we see the growth over here?
Yeah, on IPD, as I said, there are two things. One, we have a special product on shrink films, which has done good, right? And another thing, we developed a new product, and special some markets like South America that the business has increased. So, and third thing is on some of the leading film business also did good on IPD, where we saw little growth. So these areas where, as I said, we are, trying to avoid any industrial product business when margins are not there. So that's what the growth is coming from, industrial product division.
Also, I have another question. I was going through the presentation. There I found out that you have mentioned that company is foraying into two-wheeler segment for PPF. So, if you look, how is, like, can you throw some light? Because if you see the two-wheeler market in India, it is around 16 million units as of FY'23. So how you see this segment growing particularly?
This segment is actually, we have very unique way of working in that segment. So there are two OEs who are almost on the verge of, closer with our products. So we will be, that will be like direct buys by those two-wheeler companies from us. But if you talk of the volume on two-wheelers, is really low. I'll be very, candid here. The volumes are not that big because if you see in the bike, there is only that fuel tank and a little bit on the sides. The rest, it cannot be applied because it's not required. Whereas if you see the car, a big car takes 250 square feet and 200 to 250 square feet. Whereas the bike applications can be done into, it's 50 square feet?
Bike, no, some 10 to 12.
10 to 12 square feet only. So that's what I'm saying. We can be very big in number of bikes, but the volume is not that great. But since the business is directly from the OEs, so still it will contribute to a significant numbers for us.
Right. Got the point, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, I request you to limit your questions to one per participant. Thank you. The next question is from the line of Parikshit Kabra from PKD Advisors LLP Lim. Please go ahead.
Hi, thanks for the chance. I wanted to understand, someone had earlier also asked about how your product is differentiated from others, and I wanted to understand that more specifically from the PPF perspective. You're obviously storming the market. Is it just that your product is the best in the market so far, or is it a combination of product the quality of product as well as pricing, or is it a game of distribution? What is making you win so fast?
See, I'll tell you what are the bottlenecks, so that's how we can see what are the challenges. First of all, if you really see, we are the kind of last entrant into the market, which is 4 years only, as compared to world's biggest producers who are there for last 20 years. So in 4 years short time span, If we talk of our quality, it is like I can say it is the best quality at par with any quality in the world. That was number one. Second thing is, in a short period of 4 years, we are now supplying to many countries. I mean, it is going everywhere in the world, be it North America, South America, Middle East, Russia, Europe, and of course in India. And we are also supplying to China. So despite so many people present in Chinese market, we are still able to export into Chinese market. So that is a statement of the quality of our company. So first of all, when we have done in 4 years such a fast expansion, and lines are almost more than 100% running, and which is one of the biggest lines in the world. So that shows that we were able to penetrate the market quite quickly. Second thing is, since we are supplying in a short period of time so many countries in the world, so that also says the quality of the product. And third, since we are, we have a big advantage of our quality products in sun control, which has helped to use our existing network to penetrate market in deeper. So I hope I answered your question.
Just one quick check. There is no, when we say we are the best in quality, are we also priced as premium, or are we undercutting our best, closest competitor in terms of quality, in terms of price?
See, we are not the highest price for sure, but we are also not priced at the lower. So we have two products, which is Plus and Premium, and then the matte and black, which are obviously at the highest priced. Then comes Premium and Plus. So when we talk of the top range, we are slightly lower than the imported products, because we want to pay. It's our market, it's Indian market. We want to grow the market, because when these guys were highest price, if you want to understand, they were selling like 100 to 200 cars in a month. When we entered the market, these guys were selling at a very high price, and the total penetration in Indian market were hardly 200 cars of PPF in a month. As we speak, we are doing more than 2,000 ourselves. So you can see like how the market can be created in a fast track mode. So that's why we have priced we call our products as a value proposition with good quality at the right price.
Got it. Yeah. And the SCF market is also, I'm now talking about the US market for the car. If I understand correctly, both the PPF and the SCF are basically used in the automotive industry, right? So how come there was no excess inventory built up in the channels for PPF, but it was there for SCF? What was the difference there?
Yeah. Okay. So now if we talk of the selling points for Garware, for PPF, we had hardly any inventory, because it was being sold on a lot of products, because we entered the market late. So our penetration, if you talk of sun control, the number of variants are quite high. If you talk of SKUs of sun control, they are more than 100 or maybe more than 200, right? So you have a minimum quantity of everything which is going on the sea. Whereas if you talk of PPF, there were hardly one variant at that time. Now we have 4 variants. So when you supply 4 variants, you know how much in stuck into the market, so you don't replace that with that. Whereas in sun control, the requirement keeps on changing, because it's a very 200 SKUs, different colors. And the distribution network is also quite big, where distributors, dealers, and then retailers, there are a lot of long chain. Whereas in PPF, some of the direct customers are there, and with single SKU, and many of the products which I can say is in direct sales. So that's why there was no stuck up on the inventory.
Got it. Perfect. Thank you so much. I will get back. Thank you.
Thank you. The next question is from line of Tashup Karthik from Table Tree Capital. Please go ahead.
Thank you, sir. I had a simple question. So we have about 310 crore of cash. This year we'll probably add another 200 crore of cash given the quarterly run rate, right? So we'll end up with about 500 crore by this time next year. Still not able to understand the capital allocation policy here. Are we? We have spent about 7 crore per quarter in this quarter in marketing, right? So we're not going very aggressive on marketing. So we'll probably spend about 7 to 10 crore. So that's about 40 crore. we already have done a lot of capex over the past couple of years. So with 500 crore cash, could you just elaborate? I know we've been very, very conservative, and this is becoming on the border of conservative. In terms of dividends, buyback, or any other aggressive marketing plans, any aggressive capex plans, or are you looking for inorganic opportunities? What is the thought process? Because 500 crore cash, I'm still not able to understand with, given that we are throwing out cash flows like no other and we have paid off debt. Thank you.
Mr. Mehta, would you be speaking on this?
Definitely. Thank you, Mr. Kashyap, for asking this question. See, we are continuously working on the growth opportunities, whether it is organic or inorganic. And like Deepak also explained in previous questions, that a lot of R&D development activities are going on, where Mr. Arsul is heading for a number of products for developments and all those things. So it's not only the cash that we are holding it, we are working continuously for the business growth. So we are assessing our requirements, and then we are working out. Like last quarter, we paid fully all the loans. We know that keeping cash in the balance sheet as well as carrying the loan is not a good proposition. So we repaid last quarter all the loans. Now we are working on some approvals on some business plan, whether inside of new developments of the product, some of the organic growth, some of the inorganic growth. So all the projects are going on, it's still not crystallized. Once the right time comes, we'll put up to the board for approvals. And we are working on that, and definitely we will look on the other options also from dividend side also. So other alternatives, whatever is possible, time to time we'll go for approvals and then announce in the future.
I would just add one thing, Mr. Mehta, here. So actually we evaluated some, to be precise, around 3 opportunities where we wanted to grow, inorganically. So but unfortunately, during the period of COVID and after that, the situation did not allow us to go for that. So, but we are still evaluating some, areas where we want to become a local manufacturer in certain geographies. So we will be working continuously on those proposals and come up with some solution on that.
Okay, sir. Thanks.
Thank you. Yeah.
Thank you. Ladies and gentlemen, request you to limit your questions to 1 per participant. The next question is from line of Praveen Reddit from Individual Investor. Please go ahead.
Sir, congratulations for the good set of numbers.
Thank you.
My first question is, so I want to know about the your land assets revaluation. When it was last done? In which year?
Sorry, can you repeat again?
When was the last, land assets revaluation was done?
2017-18 something.
So when can we expect next revaluation in the upcoming years?
So we, as a part of our accounting and everything, we reevaluate basis. If there is any major thing, then only we reevaluate. But we'll surely consider this part. Currently, there are no such. It depends on the fair valuation.
Okay. Fine, sir. Thank you.
So since it is recently done, we don't foresee currently to reevaluate.
Okay.
Thank you.
Thank you. The next question is from line of Apur Jain from Individual Investor. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Sir, have we decided monetizing Mumbai Andheri property?
Already answered.
Yeah, we have answered that. Not yet decided, because that property is mainly what we are thinking of development rather than sell it off. And because of some constraints of no funnel zone, the proposition is not making it attractive to invest on that as of now. But we are working on that. As soon as it becomes an attractive proposal, so we'll go ahead with that.
Okay. And sir, can you name few major competitors?
Sorry?
Can you name few major competitors in this business?
Major competitors.
Our competitors.
Yes, yeah.
Which segment? We have 3 different line of business.
Yeah,
so there
PPF,
are 3
yeah.
business.
Yeah, in PPF and SCF.
So on PP, I mean, we won't like to name, but they are very quite obvious. If you can search and you can get it, who are the international players, yeah.
Okay. Thank you.
Thank you very much. Thank you.
Thank you. The next question is from line of Parav Jain from Niveshaay Investment Advisory. Please go ahead.
Hello. Sir, just to follow up. Sir, the launch of safety glass, can you throw some light on that part?
Safety glazing, rather.
Safety glazing material.
Yeah, so that product was launched in the month of August 23. So this was launched in accordance with the Central Motor Vehicle Rule 100 and according to BIS standards. So, the film complies to all the specification mentioned in the rule law, which says around 70% of visual light transmission should be there on front and back and 50% visual light transmission on side glasses. So based on that, we launched those kits which are specific to market requirement as per the compliance. So since then, the business has started and going on well. And as explained, every business takes some time. It has got always a time of 1 to 3 years when it goes and penetrated properly into the market. So the product is doing good and going well in that direction.
So what was the revenue contribution from particularly safety glazing material in India?
As of now, I would say it's only 10% or so, but that is helping us to grow the business overall. Because as I said, it's 3-4 months old only, so that's why market is just evaluating, and we are seeing a month-on-month growth on that, but the numbers are still not that big. But we expect that will grow. Like I gave you the example of PPF also, it took 2 years just to start. But here the safety glazing has already contributed 10% of the revenue, so it will go. It is continuously growing high and high from there.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from line of Shiva Purnatma Investment Advisory. Please go ahead.
IPDA, what come out? Good evening, team. Congratulations on strong solar plus PPF, 95% contribution and revenue.
Hello, Mr. Mehta?
Or
Deepak.
I'm hearing some voice, I don't know.
PPF से फुल चल रहा है.
No noise is coming. So,
जो IPD है,
are you speaking something?
उसकी लाइंस भी यूज कर रहे हैं fungible करके.
Moderator, can you please mute the line?
Just a moment.
Mr. Apurva Jain.
Hello, can you hear me?
Yes.
Okay. Apurva Jain is online.
Yes, please
Hello,
go ahead.
Yeah, actually, I've asked all the questions from my end. Thank you.
Okay.
Thank you.
Thank you very much.
Thank you. The next question is from line of Apur Jain. Please go ahead.
He already explained. So
Okay, sorry. The next question is from line of Rohan. Please go ahead.
Hello. Hello.
Hello, audio?
Yes.
In last call, there was some development going on shrink business side in America with 2 companies. So can you throw some light on, can you just update what's going on right now?
Yeah, so there was a special development of solid white, which we discussed in last calls, that business has already been commercialized and doing good. And now we have launched 2 quarters back floatable shrink film, which we call it a pearl float. That business has also commercialized, but that will take some time to go to the level of other shrink films. So in all, the North America business on shrink is growing and doing good.
Okay. That was from my side.
Thank you. Thank you very much.
Thank you.
Thank you. The next question is from line of Shiva from Purnatra Investment Advisor. Please go ahead.
Hello. Good evening, team. Congratulations on a strong set of numbers. My question is just I was trying to understand the market size of PPF, and when I see in your presentation, it says that there's 350 million as of this thing, which comes to around 2,800 crores. But I was looking at your numbers, which is 600 odd crores, and Expel numbers, which is 1,600 crores. That alone sits at 75%. So is this calculation right, or is it way bigger, or are we missing something in here? If you could just clarify on that.
Actually, we could not hear it properly. Can you clarify your question, please?
Yeah, I was trying to understand the PPF market size. And if I see in your presentation, it says 350 million as of FY'24, which comes to around 2,800 crores. And if I see your numbers and Expel, who's another big player, was 1,500 to 600 crores, and yours is 500 odd crores, this alone sits at upwards of 70%. So is this, having been in the market, do you feel this is the market, or is it way bigger, or is the calculation market this number?
Yeah. See, I could hardly understand the question, but if it is related to the market, global market, this depends on the source, but I think market is much bigger than what this future market insights have given. We will correct that in future. Because I don't think, and there is another way of looking at it, that when you talk of the PPF market...
How to know how to size this market?
Sorry?
If you could help us, how to understand how big is the size of the market?
Yeah. No, actually, that is what I'm explaining, that sometimes this market is like, B2B sales, like the manufacturer are selling to distributor, that is recorded as direct sales, right? And whereas when we talk of the PPF business market, which is published by PPF magazine and all, that includes the end customers' prices, taxes, application charges, and everything that kind of business earns to an entity. So that's why that size is really big as compared to what is shown here as 500 million. So the market is much bigger in terms of overall numbers.
Okay, helpful. Just if I could squeeze one more. If I just look at your Indian numbers quarter on quarter, it looks like on quarter you've been decreasing. If you could let us know what is the reason behind it?
Where did in domestic market?
Yeah, it was 116 crores and 87, and this quarter it is 63 crores.
From where did you get the number? Can we just recheck?
I just calculated using the 9M geographical numbers that you've given, and back calculated using the quarterly numbers for Q.
Okay, one second. Geography from the geography. In fact, our domestic market numbers are increasing continuously. One second, let me just understand.
If I just see your presentation, it says 21% in 9M geographical revenues. That considers full 9M revenues, and in 1Q you had 30% for India, and 2Q you had 22%. If I just put those numbers and subtract it, and you're getting a...
Hello?
Yeah.
What happened is the number, I think the numbers from USA has increased substantially. So that's why the number percentage is looking low. So the real drop, if you are talking, is on the industrial product side, because these are the company numbers, right? So you are talking of the company numbers, right?
Yeah. Your 9M number is 21.7%.
Company numbers, the real setback is on the IPD side. CPD side, we are continuously growing. On IPD side, there was a lot of domestic sales other than shrink films. Shrink film was still doing good. But other than shrink films, there are a lot of sale dropped in the domestic market from IPD side. CPD side, it has been continuously growing and it is robust now.
Okay, helpful. And just one more. With respect to your inventory turnover, you said that the inventory is very less for PPF. But if I just look at across your inventory turnover, it has been decreasing over the years. And now it is way lower. So could you just let us know, and your collection days have improved. If you just let us know what is the thing behind this?
Mr. Mehta, you would like to comment on this?
voice is not audible. Can you repeat the question? You are asking something on inventory turnover.
Inventory turnaround ratio, how it is going down? Can you put some light on that?
Because your percentage of PPF has improved drastically, which has low inventory, but your inventory turnover doesn't show up. And you've improved your collection days, which is good, but I just wanted to know, is it because of the value-added products or just...
Sorry, not clear your message, but you are asking something on the company level, working capital inventory has gone down, but you are correlating with the PPF.
Inventory turnover has gone down, which shows that your inventory has picked up, right? Your inventory has moved up.
Yes.
But your PPF has very low inventory, right? So the other products inventory has shot up drastically.
Yeah, that's definitely not. That's compensating this, if I'm correctly understanding your questions. We can...
so what is the reason? Because you had a...
voice is not audible and we are not...
earlier.
Yes. So Ashish, can you take his question and we can revert to him separately?
Okay. Yeah, sir, you can write to our IR, Mr. Ashish Samant. He can answer because it's difficult to do the calculation and the voice is also not properly audible.
Sure, thank you. Sure, I'll do the same. Thank you. Thank you for that.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, dear all participants, on behalf of Garware High-Tech Management Team, I would like to thank you for your valuable time. We hope that all of your questions were answered well, and in case of you have any further queries, you may contact our IR team. Thank you once again for your valuable time.
Thank you. On behalf of Garware High-Tech Films Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Good night.